Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Monday. I hope you guys had a fantastic weekend, and there we say it again. Another new all-time record high in the gold markets today. Gold and silver higher again. Silver bumping up on $28. And everybody, Jason, wants to know when the pullback is coming. And we've been telling people for quite a while, don't expect one. And not, let me, I guess, clarify that a little bit. There's going to be a pullback at some point. As a matter of fact, I had a great conversation with one of our customers this morning and said, you know, we could get $100 pullback, $150 pullback. It'll be short-lived. And Jason, as we know, the premiums will probably rise. Right now, premiums are super low, so it's a great time to take it. Now, I know, yes, would it have been better if you had listened to us and bought before March? I mean, because we kind of, I don't know, every day it seemed like I said, March. Well, guess what? It's here. Jamie Dimon was out with a note to all his billionaire buddies. Man, get ready for higher rates, according to Jamie Dimon. You know, and he's been warning. This thing's not going to end well. And I think this is what really, and everyone's trying to guess, well, what's gold telling us and who's buying it? And the people that really know are the ones buying. Because when they sit there and they know what's going to happen, I mean, we're going to get CPI this week. We'll get Fed minutes. We'll get all kinds of Fed guys, all these guys flapping their yap about, rate cuts, sooner or later, eventually, we're going to be careful. We're going to watch the data. They love to watch data. Well, you guys are watching the data. Gold's telling you what's going to happen. And I just hope and pray that more and more people figure it out before you have to pay a whole lot more to get wealth insurance, because that's really what we're talking about here. And we're talking about, listen, there's no soft landing. That's fantasy. If you like, hey, I get it. We all love fairy tales growing up, right? We did. Right, and all the cartoons and the fantasy lands, right, the unicorns and all these happy endings, right? I mean, who doesn't like those romance movies with the happy endings? Right, we all love the happy ending, right? Luke defeats the Darth Vader, right? Oh, he was his father. So what? Kill him anyway, right? We're gonna win. The rebels win. Doesn't work that way in real life. 50 to 75% correction is coming. And again, I don't know if it's at the end of this year or next year, but figure it out. This is what gold is telling everybody. Hey, guess what? That fiat money system, more and more people are talking about backing stuff with gold. That's all you really need to know, because guess what? A major reset is absolutely coming. 800-951-0592. As Jason, it just seems like, this unending streak, because it'll eventually end, but gold's just catching up. It's not even, the funny part is when I'm reading all these things, and everyone's like, hey, the rally could keep going. Guys saying, well, there's going to be a correction, and all of those things are true. But gold's just catching up, because the big money is starting to realize, okay, the fantasy, right, the fairy tale, it's getting ready to end. We're running out of pages of the book, and it's getting ready to end.
Yeah, and I think what we see in March to begin April, I actually have this feeling it's going to happen again in June. So the $300, you had February 14th, gold was $2,004, and now we're above $2,300. I get this feeling, and I'm going to watch this, I can't, no one knows for sure. No gold or silver guy, no market guy can tell you for sure, but I'm seeing some trends that make me believe gold is going to keep going this year, but it may level off later this month, maybe level off in May, but I think we're going to see a surge in June. I was watching a guy, Joe, one of these guys that has one of those gold and silver to the moon guys, one of those guys that just think, silver $500 and gold 10,000, 12,000, 15,000. And at some point, yes, he'll be right, but to say that is kind of irresponsible. One of these guys, which is, he does see those massive prices, but he said, look, this is not it. One of the guys that said that silver and gold is going to blow up. He said, this is not it. He said, this is a commodities surge. And Joe's been talking about, and we've been talking about copper and everything else. All these other commodities are all surging together. This guy's like, you ain't seen nothing yet. When gold and silver has its day outside of the commodity surge, then it's going to really explode. And Joe, that's yet to be seen. And if what I think is going to happen in June, the same thing we just experienced is going to happen in June, you're just going to have to get in. Because then we're talking gold 2,600, 2,700 by the middle of summer. Was it Bubba Horowitz? What was his? Wasn't it $2,600 he was saying by August? So boy, that sure seems to be matching up with that.
Yeah. Well, yeah, right. It was 2,500, but he said that was August, right? That's right. We still got September, October, November, December, right there. There's still plenty of time left, and I just want to remind everybody because They do like to get you to forget your history. In a 10-year period in the 70s, gold went from $35 to $800. So these moves that we're talking about, gold going up $300 in 6 weeks, that's just in line with what inflation cycles do. We'll be back after the break. 800-951-0592, Joe and Jason, Patriot Radio News Hour on this Monday. And a quick look in at the markets. And, the year of chaos, man, just certainly seems to be living up to its name. The Dow right now is up 50 points. 50 points. The S&P's up 10. The NASDAQ's also up 50. The 10-year note been as high as 446. Right now at 444 on a 10-year. That's the highest level, in a while. I'll have to look, but one of the highest levels. I know the highest level this year for sure. Crude oil off a little bit as Israel has removed some troops from Gaza. Crude oil down 81 cents. But obviously crude's been significantly higher. Right now, gold's up $4, $2,330. Silver's up 37 cents, $27.85. And Jason, the need for diversification. Listen, there's messages being sent. It's just a matter if you want to hear them or not, right? Do you want to listen? Do you want to understand what it is that's coming up here? Because we're living in a hyperinflated world. I think we've got stagflation is what it appears to be coming on the horizon. And then, of course, the banking sector, which is extremely weak. Listen, it's weak at best. We got a commercial real estate crisis right now. The only thing worth buying right now are probably U.S. Treasuries for the banks, right? Because there's hardly any houses being sold, right? That nobody wants commercial real estate. It's really an environment here where as these rates go up, first it was the CBO, then it was Bank of America, then it was Bloomberg, all coming out and saying, the real debt spiral is starting now, right? Because every 100 days add $100 billion on interest on the debt. Every 100 days add $1 trillion to the national debt. It's why we keep telling you, please get diversified here. Check out our friends over at Y Refi, up to 10.25% fixed rates of return, not correlated to Wall Street, not correlated to the Fed, not correlated to inflation or any of these other things. And like I said, I think we're getting used to how bubbles look like at the end, right? They just... everything's priced to perfection. The Fed keeps telling you that, oh, no, we did it, right? Patting themselves on, look, we win. And remember the nonsense that they told us about. And, we just got to wait for the rate hikes to take effect. Well, gosh, it's already April. We've been waiting since July. Jason, again, another one of these fallacies. They truly don't have the control that they think they do. But check out why refi, like I said, it's a great alternative for those of you out there that still need, I still need to add income into my IRAs and things of that nature. Great place to go. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24. And Jason, we're going to get CPI this week. Now we've got Jamie Dimon coming out and saying, hey, you know what? This isn't working here. The Fed, while they continue to watch the data, apparently Jamie Dimon's got better data than the Fed.
Well, and I bet Jamie Dimon has on-time data. Remember, the data that the Fed reports is lagging. So when you start to see some of these big players and you start to see gold moving, in the last 6 weeks, look, some of this information since gold's been shooting off hasn't even come out yet. And why is gold moving? Well, guys like Jamie Dimon, if they see certain information, might decide to dip their toe into silver and gold, when they see the on-time information. This is what's, kind of frustrating in the modern, up-to-the-minute world. Why don't we have these numbers up to date, up to the minute? Why can't we react to these numbers sooner, right, Joe? Because maybe there's some numbers out there that says, hey, look, these are things that are going to make gold and silver shoot off right there at the beginning of March, and you probably should get in. That's why you listen to this show. We try to give you the best prognostication of what we're seeing. And, Joe, you mentioned in the first segment about March. We've been talking about 2024 for 2 years. I was talking to Joe. I remember telling Joe that I thought gold would be kind of sideways in 2022, and it'd stay high. But the raising of rates, it's great what gold did actually. What gold did in 2022 and 2023 with rates going up and staying up shows you how strong gold is. Now they're not going up anymore. We said 2024. And here it is. And I think these guys, Joe, the big players in the markets, they get this information much sooner. They get to react much earlier. So you have to play a little chess instead of playing checkers, right, Joe? You gotta see this stuff ahead of time. And there's never a bad day to buy gold. Gold is what keeps you whole, keeps you safe, keeps you keeping up with that inflation that we're seeing. You can invest all you want in all that other stuff and take risks. That's fine. But if you want to keep what you've got whole, how much purchasing power have you lost just since COVID, right, Joe? Out of $100,000, you lost $35,000, $40,000 in spending power just as before COVID.
When you think about food prices are up 40% from, in 4 years, right? And that's probably being kind when you look at it. How about credit card debt? This came out late Friday. Another new all-time record high revolving credit, a record $1.339 trillion. Gosh, revolving credit now, credit card debt approaching student loan debt, non-revolving credit barely rose at all, right? That goes to tell you, right? That's people buying houses and cars, right? Right now, everybody is scrambling with the charge it. Credit card rates hit another new all-time record high, 21.59%. And guess what? With what rates are doing right now, Jason, those rates are only going to get worse. Are we going to see a basic credit card now when you carry balances 25%, 30%? I think that's what That's the only way these banks are going to stay afloat.
I've seen introductory rates at 29.99%, depending on if your credit level is average, if it's not good. So we're going to see people in the 30. I mean, it's loan sharking, isn't it? It's in the 30%, 32. I've seen if you don't make a payment or you get behind, 32.99% interest, the annual percentage. Can you imagine, Joe, if paying that kind of interest? I mean, that's it seems almost abominable. But I guess if you go to the inflated 70s, and people were getting mortgages at 20%, weren't they, Joe? So I guess you just got to look at the history.
Yeah, and when you're sitting there thinking, like Jason said, heaven forbid you're late by a day or you miss a payment, right? Then they really start going after you. But this is, again, charge-offs continuing to rise in that field. So it's bad enough we know about commercial real estate, but now the charge-offs on the credit card rates, right? Yeah, we're charging more and more. But at the same time, more and more people are getting getting sent to collections, which means the rest of us got to pay more, right? It's kind of like insurance, like the homeowners insurance and car insurance. It is absolutely insane what is going on with the price of things. And now all of a sudden, Jason, this fantasy of somehow inflation was miraculously going to go away. We had a great jobs number. Now, after the fact, they're saying all 300,000 jobs were part-time. It doesn't matter. Here's what the data is saying. People are working, but they can't afford to pay all their bills. It's really simple. It's simple math. This is what's going on, and it's one of these things now where with inflation running rampant, and again, you want to get rid of inflation, do two things. One, close the border, and inflation will probably go away. It will, right? Of course,
yep.
The economy is going to collapse upon itself, and Jason, I think we're just sitting in this storm, like we said, rising gold prices with rising rates. Because we're in the cycle. They can't stop the printing. Look at what the debts are doing. Look how fast the debts are rising. And when we see the solution here, they're just not willing to do it. The Fed needs to raise rates at the next meeting. They do. Are they going to do it? Nope. How about the meeting after? Right? They're still talking about we're going to cut rates at some point this year. Right? Because why? Because, well, gosh, we can't keep going this way. If we raise rates anymore, all these banks are going to go under, right? Yeah. Nobody's going to be able to refinance their loans, right? And all of these things. But, I guess I'm going with what Jamie Dimon's telling you, what the gold market's been telling you. Hey, guys, I got bad news for you. Inflation didn't go away. There was no soft landing. And now the really hard choices are coming. Right, Jason?
Yeah, remember, gold is regularly a leading indicator of inflation. So gold went up in 2020. Well, here came the inflation. Now 2024, we still had this higher inflation, and gold's roaring. I mean, gold's roaring way faster than it did in 2020. I mean, it went up fast in 2020, but it's going up faster now. So what does that say about inflation? Jamie Dimon saying inflation. It's not that hard of a prediction. We've been saying worse inflation towards the end of this year for a while, and gold is saying it just like Joe said. And I mean, Joe, what kind of inflation are we looking at? I mean, how bad is it going to get? And here's the thing, Joe. What happens at inflation when the Fed decides we're going to go down a quarter point to make the markets happy? Because I know that you said it shouldn't happen, and Jamie, everyone's saying, we got to either raise the rates if we're going to stop the inflation. I get this sneaking suspicion. The Fed is, one thing over the last 4 years, the Fed tends to do the things they say they're going to do. Now, they didn't say they were absolutely going to lower rates, but I could see that little quarter point lowering of the rates just to get exuberance in the markets, and what kind of prices we'll be paying late fall and winter, right, Joe?
Yeah, and the lunch lady, Janet Yellen, she's in China right now, trying to tell the Chinese how they should run their country. Going over like a lead balloon. But she reiterated, the United States is ready to sanction China if they aid Russia's war machine. See, right? This is the problem. This is why this is happening. People haven't figured it all out yet. Number one, we got ridiculous piles of debt. Everybody sees that. But number two, right? It's like, listen, we can do what we want, right? Nobody else can, just us. Right? We can send weapons to whoever we want, right? We can put sanctions. We can take people's gold. We can take their assets. We can do whatever we want. And oh, by the way, if you decide to do something we don't want, we're going to sanction your banks. That's what Janet Yellen told the Chinese today. And Jason, it did not go over well. And why should it? This is the exact opposite thing. And I say it all the time. We're like that person trying to hold on to power, but we don't want to change what we've been doing. Right? So what do we keep doing? We're trying to close our fist and force people in it. And guess what? That just doesn't work anymore. It's just a dangerous time here for the United States. And unfortunately, that means it's a dangerous time for all of our wealth. Get it protected. Get that gold and silver put away. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Monday. Once again, gold's up 5, 21.31. Silver up almost 40 cents now, just right beneath $28 and counting. I think we've got a long way to go here. But when we look at availability out there, I've got about 40 $10 liberties. There's not a ton of product on the market right now. And, of course, like I said, big money coming in, buying up the market. I got 40 $10 liberties at $1,100, or I'm sorry, $1,200. Gosh, $1,100. That was 6 weeks ago. $160 on the silver side. Rolls of silver, $50. $225. So that's, man, what a great price for rolls of silver, $50. Both of those available today. 800-951-0592. And a lot of people Jason, they're talking about, hey, I want to get involved in the gold and the silver market, but I don't have $1,260, laying around. I don't have, 225 extra dollars a week or a month, but I have most of my wealth in an IRA, and I'm wanting to protect myself. We do precious metals IRAs. You can do any amount. I think the minimum is $5,000, but any amount above the minimum. If you have an IRA with $500,000 in it, you don't have to move the whole thing. You can say, I'm going to put in $150,000 or $200,000 or whatever the number may be. The really neat thing about a precious metals IRA, no, you don't get to store it at your house. Any gold dealer that's trying to tell you that you're being scammed, it's not the rules. It's not the matter of fact, the IRS actually added to its code to say specifically that you cannot do that. So don't do that. Don't try to do that. The system, I wish there was a way to circumvent the system. There isn't. You can store, you got choices. You can store it in Delaware. You can store it in Texas now. I'm hoping as more and more states come in and do their own depositories that will have more options to store it in the future, which I think we will. But you get to control it. It's just like buying a stock. Instead, you're putting physical gold and silver. The physical gold and silver, we actually ship it to the depository on your behalf, and then you get to decide what to do. What I mean by that is you can take delivery. A lot of people, when they get to a certain age, right? I forget the age now. I think 70, maybe it's 72 now. Where the government says, hey, you have to sell 10%. You have to. You can take that 10% in physical delivery. You can sell it. You can do what you want. You can liquidate the whole thing. How hard is it if I decide, gold goes to 5,000? Well, now I want to go back into stocks because stocks lost half of their value. You can do that too. There is no penalties. You don't pay a fee. It's a trustee-to-trustee transaction, so you don't have. It's not like you're selling out and then you got to pay taxes and all that stuff before you get in there. No, it's a trustee-to-trustee transaction, and like I said, it's all liquid with a phone call. If you want more information, you can go to allamericangold.com. We've got an IRA tab out there, and obviously, if you want some help. Arlene handles all of our IRAs. She'll deal with, she'll set it up to where all you have to do is sign stuff, right? And believe me, doing that paperwork on your own can be hard. We'll hold your hand the whole way through. So if you want more information on a physical gold and silver IRA, call us at 800-951-0592. The Dow just went negative, Jason. Not really surprised by that. As, like I said, we got the big CPI report in the Fed minutes. Going to be interesting to see if they put in there anything about worrying about inflation rising again.
They talked about it quite a bit the last few years, and they have been sort of talking about it a little bit less, haven't they? They've been sort of kind of pushing away from it, which that's one of the reasons I think they're going to try sometime before the election, whether that be June or the next meeting after that, which would be middle July, trying that little quarter point. We're gonna lower it a quarter point because it really needs it, but. We haven't seen any numbers, right, Joe, that really indicate that they should be doing that. They're going to have to come up with a reason why they're doing it, and once again, maybe those that get the real numbers, maybe they see something that's getting ready to happen. There sure seems like the job market has. There's a lot of alarm bells ringing, except for, like you said, the illegal immigrants filling up the job openings. At some point, the job openings will stop filling up, and if companies are still liquidating and downsizing because of poor numbers, then we're going to get those job losses, Joe. We're going to get that, but. What month, what week is that going to happen, right, Joe? And then is that going to be the one excuse that the Fed uses to drop it a quarter point to try to make everyone happy, try to get a little exuberance in the markets, and then they're not going to be talking inflation, are they, Joe? Is the Fed going to talk inflation if they're going to do that? They're going to try to avoid that conversation, aren't they?
Yeah, and I think they're going to try to avoid it like the plague. Matter of fact, I'm convinced they're going to get, so not all the Fed governors get a vote, right? There's only 9 votes. Obviously, Jay Powell gets the vote. The vice chair gets the vote. New York always gets a vote, and then they rotate all the other votes. They'll get the Fed governors that don't have votes when they come to whether or not they're going to raise rates or whatnot. They'll be the ones talking about, oh, well, maybe we need to start, we got to watch it. We got to be careful. But I think you're right. I think when push comes to shove, they've already proven that when push comes to shove, they don't have what it takes, and they're unwilling to do what it takes. And the realities are, we're at this point where, Jason, doing what it takes makes the problem worse already without raising rates. Bank of America is talking about debts, interest on the debt being $2 trillion by this time next year. Can you imagine? I mean, that puts our national debt, what, $3-4 trillion, right? In 1 year. now you say, wait, rates are actually going to be higher than that? That's kind of the problem. It's a catch-22, and I think this is what gold's been telling everybody. Patriot Radio News after the break. 800-951-0592. Joe and Jason on this Monday. $10 liberties, 40 $10 liberties, 12,000, not yet. I'm going to get it right. It's Monday. $1,260 on $10 liberties, rolls of silver, $half at $225. So you get rolls of $half, the same price as quarters and dimes this morning at 800-951-0592. And Jason, there's been lots of talk about the need to go back to the gold standard. People are kind of looking at the setup here, this debt catastrophe that we seem to be on a collision course with. The Philadelphia Federal Reserve, what was it? Was that last week or the week before? They did a review, a white paper, if you will, on, hey, what would be the best thing in an inflated world, an inflationary event. Kind of interesting that they're decided to do this little exercise at this time, right? You can decide why, hey gosh, why did they decide to do this now? But they did, and they used, fiat money, digital money, all kinds of different options. And they ended up saying at the end, the best thing to prevent an inflationary cycle is gold and silver. And obviously something that if you listen to this show, we've been telling you that forever. One of the great things about America, when we were on the gold standard, we didn't have inflation. The only time you had inflation was war. And the second the war was over, prices went right back to where they were. There's a reason they did the study. They know what's coming. They just don't want us to know what's coming. Kind of interesting today, Zimbabwe, which, let's face it, Zimbabwe's probably tried every BS thing you could possibly imagine to get its currency problems corrected. Guess what they did? Well, Jason, they went to a gold standard. Right now, Zimbabwe is saying that they're going to a gold standard to try to stabilize their country and their country's currency. And you know what? I know it's Zimbabwe, and it may or may not work, but I guarantee you this already. It's the best received thing that they've done so far, Jason, when it comes to their currency, going back to a gold standard. And I think you're going to see a lot of countries start talking about, man, maybe we need to look at this again, right? Maybe, just maybe, allowing the bankers to be in charge of our money wasn't the greatest idea. And I'm going to tell you right now, I think more and more people are starting to come to that conclusion that, hey, wait a minute, I don't like it when every time I go to the supermarket, everything seems to cost more. I don't like it every time I open a piece of mail. Or for you modern day people, when my automatic bill pays happen, everything is more. My power bill's more. My car insurance is more. My homeowner's insurance is more. My medical costs are more. My water bill, my trash bill, right? Every single bill you open. And now, city after city after city, Jay, we're broke. California states, and now we're broke. Everyone's broke again. And this is what inflation does.
I still remember 2019. We're talking about all these cities and their problems and how their pensions weren't getting funded and how they were going to, it's funny because just was it a week and a half ago, you're talking about how Houston isn't paying their firefighters. This is the exact same stuff we were talking about 5 years ago in 2019 as the repo market, suddenly somebody wasn't able to post their overnight, bills, right, Joe? And then suddenly it's the interest spiked to 10% on overnight loans and wait a minute, something's really bad here. A couple months later, COVID and markets going berserk and gold went spiraling upward. And here we are again. Now the cities, after how much COVID money was really passed on to these blue states? How many boats were floated during this thing? How much of what was the COVID emergency simply an emergency of economics, or passing the money around was really the emergency, Joe? And here we are again. They bought themselves apparently 5 years to be, at least as far as these cities and states, to be in the exact same spot. 5 years. What are they going to do to buy themselves some more time, Joe, right? I'm sure the Fed has a few more tricks, and they're going to make sure that they don't get blamed for any catastrophes ahead.
Yeah, and it's something where add that right to it. Wait till all these budgets come out starting July 1st. I know it's a big election year this year, right, because of the presidential election. I can already tell you bond overrides are going to be on steroids, right? We need more money, right? Oh, my gosh, it's for the kids, right, and all of these things. And eventually what happens? People run out of money. I mean, that's just what happens. I mean, that's the sad reality of it all is, hey, you only can do it for so long. And then eventually people are like, that's it. That's all there is, right? I don't have an extra, whatever. Well, it's only an extra $50 here and an extra $30 there and an extra $40 there and a $50 there. And then all of a sudden there is no extra. Patriot Radio News Hour. How do you like inflation so far? Final segment coming up. The big solar eclipse, right? Yeah, be careful out there. Don't look directly into the sun. Is that a real thing?
Boy.
Yeah, right? The solar eclipse. I think it is, but I don't know. I'm gonna. I know I'm gonna look out, right? I'm gonna check it out. That'll be. I know a lot of people out there thinking that it could lead to some funny stuff out there, and it may, right? I mean, come on. We kind of live in a world of funny stuff, don't we, really? I kind of think it's interesting, but I kind of believe anybody that listens to anything the central bank has to say likes funny stuff, because what they say, it's nonsense. I mean, when are people going to figure it out? I just don't get it. Just because the cheerleading, right, the equities guys, the people on TV, that's what they care about. They know the second all of these things stop costing more, we're going to have a problem. A really big problem. And I think this is it. I thought we had more time. And I've said this. I started saying this last week. I really thought we had more time. I thought that we could run this debt. I didn't think it was going to go up this fast. We were talking, remember I was saying, hey, the debt's going to be between 2 and 3 trillion, which it is this year. But now all of a sudden, people are saying we may just skip $3 trillion altogether, right? Can we just skip a whole $1 trillion and start throwing $4 trillion a year? And who in their right mind? Where is all of this money going to come from? And I think that's the big thing, because the rest of the world said, nah, we're buying gold. That's what we're going to do. We're going to get ready. We understand what's happening. And I think this is the big thing. I think the next 5 years, we're going to go under they call it a reset, whatever you'd like to call it. there's going to be a lot more poverty all over the world, a lot more poverty here in the United States. And as long as you have enough gold and silver put away, you won't have to go through it. $10 liberties, like I said, $1,260. Rolls of silver, $50 at $225 at 800-951-0592. And maybe the eclipse is kind of saying, hey, the sun is setting on the American empire. I don't know.
We'll see what happens, Joe. I mean, it's in a lot of ways, it just seems like it's very much under control, and they leave it up to the individual to know what to do financially in your own house, and we don't make the rules and we don't control the system, but we can try to do the best we can to guide people to at least on the savings side, put it in something better than paper cash or especially digits in your account. And that's what you have to do. That's what you have to do to protect what you've already earned. I mean, it's so hard just to get the stuff saved up, right, Joe? Just to take that little bit on the end of your paycheck and put a little bit away. Inflation kills savings. If you are somebody that has a little bit you can put into savings in a meaningful way, you should not be hesitating. This year is going to just heat up, and inflation is going to make gold and silver soar a lot higher than it is now in the near future, Joe.
800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.